Good afternoon and welcome back to Moneycontrol live stream. You're watching the closing bell. I'm Santosh Nair. Benchmark indices Nifty and sensex ended higher today. However, overall trading volumes continue to be on the lower side. Second line shares were under pressure today. This was slightly in contrast to the trend seen over the last couple of days, where second line shares, the mid cap and small cap, have been actually faring better than the front line shares. But if you look at the last couple of weeks, overall most mid cap shares continue to be higher than what they were till some time back. In sectoral trends, shares from the IT, FMCG and pharma sector gained. However, shares from the PSU banking and realty sectors were under pressure today. The India VIX fell by about 3% to 11.6. The volatility index, which is a measure of the market sentiment over the next 30 days, which is what VIX does, that's been steadily slipping. Now, this has also been causing a problem for the option sellers, because lower VIX means that lower volatility, and accordingly option prices are also low, which means option sellers can't really profit in a big way. Among the big gainers in the Nifty, you had ITC, TCS, Britannia, Asian Paints and Wipro, whereas among the prominent losers of the day, you had HDFC Life, Tech Mahindra, Adani Enterprises, SBI Life and Hindalco. And with that, let's look at some of the stocks that were in focus today, starting with HCL Tech. Overall, the tech basket has been in the limelight the whole of this week because of the quarterly earnings season. Numbers from TCS and Infosys were slightly underwhelming. HCL Tech's numbers have got a mixed review from analysts. Majority of them have been slightly negative on the performance, because it seems to indicate challenges for the company for FY24, but at the same time a few like Macquarie are still bullish on the stock. JP Morgan has rated the stock as underweight and target cut to 880 rupees from 920 per share earlier. According to JP Morgan, the fourth quarter earnings miss in the services business were largely led by discretionary spending cuts. Also, project ramp downs and deferrals led to a miss in FY23 constant currency guidance. The sectors which are the key verticals which are seeing pressure include telecom, manufacturing and high tech, although there was a ramp up in one of the BFSI accounts, and which helped the company post decent set of numbers. The FY24 constant currency guidance has been maintained at 6 to 8%. However, JP Morgan feels that this guidance is weak. Also, the constant currency guidance is about 200 basis points below consensus and largely in line with what JP Morgan had been estimating. The brokerage has cut revenue estimates for the company by 1% and margin estimates by 20 to 30 basis points, which has led to a 3 to 5% cut in EPS estimates over FY24, FY25. ICICI Prudential Life is the other stock that was in the limelight today after its fourth quarter earnings. Macquarie has rated the stock as an outperform with a target of 580 rupees per share. According to Macquarie, overall the company reported strong metrics across all its verticals in Q4. Now, till a couple of quarters back, the company was focusing largely on margins, but that was coming at the cost of volume growth, which had led to the stock being derated. Now, the company is trying to address that through a change in its product mix. It was earlier focusing mainly on ULIPs and annuity. Now, it is trying to increase the share of term products in its overall portfolio. And according to Macquarie, the share of the ICICI Bank channel has come down to 9% in Q4, and it has probably bottomed out. It has also flagged the fact that the management is confident of delivering strong growth in value of new business in the coming years. Prestige Estates, the company declared its fourth quarter business update, and it reported the highest ever pre-sales and collections in Q4 and also FY23. The stock has been somewhat of an underperformer over the last year. According to CLSA, which is bullish on the stock, the company is trading at a significant discount to peers with a similar scale. CLSA has a buy rating on the stock and a price target of 566 rupees. According to CLSA, the company has maintained its pre-sales target of 25,000 crore in FY26. Page Industries is the last stock on our watch list this afternoon. The stock has been steadily inching up over the past many weeks and has now climbed to a two-month high. Stock had been under pressure for the last few months. The management commentary also was not very inspiring. In fact, the management had said that the company was hurting because of weak consumer sentiment. So it's still early to say if the recovery that is being seen in the stock over the last couple of months it can sustain. So we'll have to wait for some management commentary and also for the fourth quarter numbers for that. On the positive side, the company has been steadily stepping up its presence in the athleisure segment. Well, and that's all that we have in this episode of Closing Bell. Thank you for watching, and we'll be back with you again on Monday at 9 a.m. In the meantime, have a nice weekend from all of us here at Money Control. For all news, views and analysis, stay logged on to moneycontrol.com.